Hello there, I'm Andrew Bell. Welcome to a BNN Bloomberg 1 hour special call-in show we're calling Ask Me Anything Housing. Despite interest rates beginning to move down, home prices in Canada's hottest markets are still sky high and mortgage rates remain elevated. Amid all this uncertainty, there are lots of questions about housing and affordability. Meanwhile, renters face the challenge of how to even get into the real estate market. And for homeowners, there's the question of what they should and could be doing with what, for many people, is their biggest investment, their home. We want to give you, our viewers, the opportunity to put some of those questions to leading lights in the field. We're bringing you a veteran mortgage broker for his expertise on rates, the head of one of Canada's leading real estate brokerages on everything to do with buying and selling, and an economist with Canada's housing agency for a big picture view on the market. We're going to be joined for the next hour by Ron Butler of Butler Mortgage, Lauren Hall of Zoocasa, and Bob Dugan of Canada Mortgage and Housing Corporation to answer your questions on Canada's housing market. Call us toll-free right now, 1-855-326-6266, or email us, amahousing@bnnbloomberg.ca. So welcome to our special Ask Me Anything Housing. We're really looking forward to getting your phone calls and emails. And Ron, Lauren and Bob, thank you very much indeed for joining us.
Yeah, thanks for having me.
Great having you for the next hour. Bob Dugan, can I start with you, please?
Sure.
What is the biggest factor in housing affordability right now? What is the biggest cause of the problem? Simply high home prices?
Sure. So with affordability, I think one of the biggest problems and one of the causes for the high home prices is the shortage of supply in housing in Canada. We all know there's been tremendous growth in demand through population growth. In fact, last year, we had the strongest population growth in Canada since 1957. And those people need a place to live. And so there's a shortage of housing. We're not building it quickly enough. And as a result, we're seeing pressures in terms of affordability for home ownership. I mean, because of the high interest rates, home prices have come down, but when you look at mortgage payments at those higher interest rates, we still have an increase in the cost of owning. And because it's so expensive to get into home ownership in many markets across Canada right now, a lot of that population growth is moving towards the rental market, and we're seeing some really frightening numbers in terms of rent growth, especially when you look at rent growth in units where there's turnover. So, rent control protects a lot of people when they live in a unit, but as soon as they move out and someone else moves in and those rents correct to market prices, you get in Toronto last year, 40% growth in rents for those turnover rents. So real pressure on affordability. Main culprit in our view is supply.
Lauren, you reckon that we still haven't felt the full impact of these increases in interest rates yet?
No, we haven't. And I mean, I'm sure Ron can speak to this as well, but all of the mortgages that are still up for renewal coming forward means a lot of the homeowners haven't actually felt the full impact of these interest rates yet. A lot of homeowners brought forward their refinancing and did so in 2021, early 22, when you could get essentially free money.
Mortgages, yeah.
And then we had a 500 basis point growth. So there's a lot of sellers in the market that we haven't seen forced selling yet to a big degree.
Ron Butler, for a long time, variable mortgages were the way to go. Of course, you were taking on more risk, but then they became more expensive than fixed price.
Yeah, risk didn't turn out on that one at all. It was a bad thing that happened to people in variable. Look, it's really probably going to be the most impactful renewal segment. It's going to be the next 2 years of variable folks. We have 4 banks that didn't really raise their payments. So now we've got a really sizable impact at renewal.
Just to clarify there, they didn't make their clients have to pay more in terms of the monthly mortgage payment, but they extended the amortization on the mortgage?
No, the interest just built up.
Oh,
just built up and built up and built up. So in many cases, we have mortgages that grew over the last year and a half.
Bob Dugan, that's not the direction you want to be going if you've borrowed heavily for a house. Your mortgage growing.
Well, absolutely, and so there are a lot of people facing payment increases, and for a lot of these fixed payment variable rate loans that we're talking about, when you get back behind on your amortization schedule because your payments weren't covering the interest, on renewal, you have to sort of get back on your original amortization schedule. So people are facing payment shocks for those down the road, and other folks with fixed rate mortgages renewing at now higher rates. That'll be a big payment shock for a lot of folks as well. The Bank of Canada did some work and estimated that over the next couple of years, 50% of mortgages will be renewing at higher rates. And so, on the one hand, we see interest rates coming down at the margin, but the effective interest rate for a lot of people who are renewing their mortgage is going to be an increase in interest rates.
And Lauren, you want to remind us that rates are not that high by historical standards right now.
They aren't. I mean, a 5%, you can get 5-year fixed under 5% right now. And I mean, that's still a pretty reasonable long-term mortgage rate. And so if we think about, going back to what Bob said, I think supply continues to be the true issue here. And the fact that rates went down so low and prices shot high because money was free. And so now we've got a number of sellers that don't want to sell for less than the peak. And so we've still got a pretty big spread between what sellers are willing to sell for and what buyers can afford to pay.
Is it like that classic fallacy in the stock market? I'll sell when it gets back to where it was?
We're definitely seeing some of that. Yeah.
Ron, would you agree? People are just hanging on, hoping to get back on side?
Some are hanging on. The majority are hanging on. Some are starting to slide off. It's becoming just too unmanageable for them. Because uniquely, in the last short period of time, say the last 6 months, we've started to see increases in unemployment. And if that rises, then the impact of renewal combined with the possible loss of income within the family, that could be the real problem that we're going to see in the next year.
Yeah, as you say, once people start becoming unemployed, the problems start compounding. Bob Dugan, I know we're going to be talking more about housing supply, but the odd thing is that housing starts are likely to be down this year.
Absolutely. I mean, last year they came in much higher than expected, and a lot of that was multiple starts in Toronto and Vancouver that just basically exceeded our forecast. But now it looks and a lot of the reason for that was, a lot of these big projects where, the financing was prearranged at rates that sort of predated the increases that we saw. And so they were operating in a bit of an artificially, positive environment. But now what we see going forward is a lot of these multiple projects going to be not happening to the same degree, particularly in Toronto and Vancouver. And so we're going to see starts overall decreasing this year. And that's unfortunate because, as you say, when we have a supply gap, we think that the pace of housing starts actually has to double each and every year over the next 10 years to close that supply gap. Instead, what we have is starts slowing. They were about 270,000 units a year back in 2021. In 2022, we had 260,000 starts. And now we're expecting, somewhere in the neighborhood of 220,000 starts this year. So, the numbers are coming down, and what we need is to go back in the other direction.
That's amazing. Lauren, I guess we hear a lot about development charges from municipalities and delays. It's not easy to build housing.
It's not. I believe the stats in Ontario is 31% of a new development cost on property, taxes and fees. And government fees. So if we think about we need more supply and your average production cost is about 16% tax and housing's 31%, we're not going to tax our way into more housing supply.